You're live. Alright, I'm gonna do my pre-market game plan because I haven't done it yet, so I'm gonna do it here on live stream. Alright, so I'm gonna do my pre-market game plan. I haven't done it this morning, so we're about to do this right now. We're gonna speed through it. Alright, let's look at this. Alright, so let's go back to M&Q. And let's go back to the daily time or the monthly time frame. All right. NQ monthly time frame. We're about to do the top-down analysis and pre-market game plan because I came pretty late to the office today, so we're about to just do this right now. So I haven't looked at the charts, but we're about to look at this just now. All right, so monthly time frame, we have opened, manipulated down to discounts of this range. Now we're distributing based off this daily monthly candle. We do have 21 days left until this monthly candle closes, so we are in premium of this range. Previous monthly high is slightly just like 200 points away. We're going to look at the weekly now. So weekly time frame, we're still stuck in this consolidation range around this area. We do have previous week high above us, so that is a good draw on liquidity to work with. This previous swing high right here. So we're going to look at the daily time frame now. So daily time frame, we have this previous daily high up here, then we have previous daily low. I'm going to draw out this as well. So premium range and discount. So we can see how today's opening of this present candle opened. We then manipulated down into discount, and then we practically just distributed up, taking out previous daily high. So this is pretty clean right here, the opening and then the pretty much the distribution of the candle once we went to discount. So I'm going to see if I can mark this out even better. But that is clean itself. In the time frame. Okay, yeah, that is actually insane. That's actually really clean. All right, I'm gonna pull up the economic calendar of this week, Monday to Friday. So Friday we had news at 8:30 a.m. news, and we can see how news helped price just come to discount and then should be back to previous daily high. This is honestly one of the most cleanest things I have seen. Mind you that I just got into looking at the charts. I came in pretty late, so I haven't done my pre-market yet. Okay. If I were to look for a trade today, I don't think I would. Just because we already took the objective, which was this high up here. It's today a low probability day. So daily opened, came down, took previous high. I'm gonna look at the 4 hour now. Today is Friday. This last down close candle, where we closed above it and then found support. This is a very clean change state illuminate. First weekly high is slightly just above us, but just because it's Friday, I don't know. It is 87 points away though. This is the 4 hour here. Let's look at that. Let's look at the hourly. What do we see in the hourly? That same change to the delivery level. We have pre-stated high and pre-stated low. I'm gonna zoom in. So we have the midnight opening price, trades below the opening price, traces into this hourly or 4 hour change delivery. Then we move up. What I'm going to be paying attention to is this hourly SIBI right here. I want to see a closure above. You want to see higher prices. So if you want to see higher prices moving forward, I need a closure above this daily or this hourly SIBI. $15 This is just 15 minute. It's just pure accumulation in the 15. So it's like this. It's like this, right? Accumulation followed by manipulation, distribution. We have more accumulation here. Accumulation here. I still like pretty big high though. Definitely a good draw on liquidity. But time of day is just not something that's convincing me. Let's see what 930 does. Here's big high. POI. Not really any POI at the moment. All right, so we had the opening of 8:30. We had the NFP release. Came down, retested the hourly change to delivery, which is basically this level here on the hourly or on the 4 hour. Reopened, came down, found support, and then distributed back higher, taking out the recently high. To keep it simple, all we did was just reach this count, this range. Now the question is, if price wants to go higher, what is my confirmation level? Or what do I want to see in price if we want to continue pushing higher? Well, what do I see on the hourly? On the hourly, I see this Ferrari gap, this hourly civvy, right? This is what I'm paying attention to. If I want to see price continue higher, I want to see us respect this hourly with body closures above. If we close below this hourly, it has the higher probability of invalidating bullish moves. Because we have two targets, right? We have this wick high, and we have this wick low. My ultimate higher time frame drawn liquidity is previous wick high, right? But I want to have confirmation first. So right now we had the 9:30 open, so 9:30 opening bell. We had price trace down into the hourly civvy, and we have found support from it. Now we have taken the 8:30 high. I want to see how this candle can close relative to this bit civvy right here. Looks like we're about to take previous week high now. So ultimately, 930 just manipulated, retested the hourly for a rally gap, and now we just took previous week high. For a Friday, this was kind of clean. For a Friday, this was kind of clean. Alright, I'm not gonna lie, this was the cleanest delivery I have seen. Wow. I didn't think we were gonna hit previous week high today. It was already clean delivery, just the previous daily high. But previous weekly high delivery, when it hit it, it just made today's price just beautiful. Wow. This is NFP manipulation. If you guys can understand what just happened today, you guys know how just clean this was. All right, so we hit previous week high. Now, Carlos, what is my next strong liquidity? Well, let's zoom out. So if we hit previous week high, what is my next goal, right? So this is the monthly time frame. My next goal would be previous monthly high. I'm not saying it's gonna get hit today, but it has the likelihood to be in Rand probably by next week. So this level up here would be my final draw liquidity for the month, which is the higher probability target because it's the previous high of the monthly candle with the monthly time frame. So I'm gonna zoom in during to the weekly. So here we can see that in this consolidation range, we managed to take out previous week high. Now we have daily time frame. If we do we're about like 162 points away from previous monthly high. That'd be like a 0.7% move up on NQ. 4-hour time frame. Ideally, if we want to deliver to these equal highs above, we want to see displacement with the fair value gap. But I don't think we're going to get that until next week because it's Friday right now. So just by us running this high, this is perfect. This price delivery is perfect, right? It's Friday though. So time of week is not really there for me to see us just continue pushing higher another 148 points. But if it does, then that's fine. But these equal highs resting above up here, those look good for next week. So if I were to have a draw on liquidity to play with, it would be definitely these equal highs up here, which is where previous monthly high is right around. So that's the 4-hour time frame. now have the hourly time frame. I want to see if on the hourly we can close at least above previous hourly high, which is the 8 a.m. high. We can close above this one, and the next hourly opening leaves this little gap. If it leaves this little gap and creates the hourly for value gap, that's going to be perfect, but I'm not going to expect too much for today. We already took both of the main levels that I was looking for, so it was previous daily high, previous week high. We had this accumulation here, down here, followed by manipulation, so technically it would look something like this. Any average distribution to is high above. If you guys are able to see price like this and anticipate where manipulation is likely to occur, it would be easier on your eyes to know when you should be involved and when the bus is already left. If the manipulation wouldn't have reached discount and below midnight, would it be less probable of a trade idea? So if price did not reach below here and below discount, then I would have likely not looked to engage. Because if we were remaining above the midnight opening price before the NFP release, just straight shot up, I don't really see any clear manipulation, right? Because when prices are consolidating like this, when it's just chopping back and forth, building liquidity, you want to see an external move away from where you're actually supposed to go. So if my target is to the upside, I want to see sell side get taken first. So before we push up, we must come down, taking out something, and then push higher. So the same applies the other way around. So if my objective is the downside, I want to see us accumulate. Then I want to see a push higher. I want to see clear manipulation. And then I want to see that distribution if my objective is the downside. So if we're just going to range, if my objective is up here and we're ranging down here, but we don't get that push lower, but we remain above the midnight open, I'm not really looking to engage unless we're like around this area and I can see a clear entry and then target the upside. But if we're just ranging and we don't see clear manipulation, then I'm likely not going to engage in the market because the manipulation could be to the upside and that can get stopped out and the expansion to actually to the downside. So before I enter, I want to see clear manipulation, confirmation on lower time frames, position myself within the wick, or position myself within the reaccumulation of that body candle, and then continue pushing higher. Yeah, no problem. Lately, these past few days, we have been offered clean, clean open, low, high closes. So similar to yesterday's price action, where we accumulated. So this is yesterday's price action, right? So we accumulated, came down to discount, and then distributed. Same thing before that day as well. We accumulated, came down, then distributed to the upside. So 1, 2, 3, and then we have 4. So we've been offered a lot of clean open, low, high closes recently, and it's actually really insane. And it's good too because the more you're seeing it, the more repetition you're training your eyes to look for. So every single morning when when you're looking at the daily time frame, mark out your premium discount. And if you're expecting an open, low, high close daily candle, then you can wait for price to retrace the discount and then continue pushing higher. So we had this candle here at 10 a.m. Wow, that's a big delivered over 128 points. Wow, this candle just delivered 128 points. All right, so we took NFP data lows. I think this 10 a.m. candle dropped way more harder than the NFP release. Hundred and 27 points in seconds, taking out the data lows. Yeah, this candle definitely stopped a lot of people. All right, I'm gonna mark out the 10 a.m. opening. There we go. Lost it for a second. All right, mark out. I'm gonna put the 2 4-hour candles. So we already took this low out. ES hasn't taken this low out yet. And then move this guy to the more to the right. So right now we're below the midnight opening price after taking out previous week high. Gonna go to the daily time. This might be an outside candle today. Taking out both previous daily high and previous daily low. Okay, so just like how we talked about earlier, if we zoom out to the higher time frame, you never want to be stuck in the lower time frames, right? If you zoom out to the weekly time frame, what did we talk about, right? What did we talk about yesterday in the live stream? Weekly time frame as of now is in the consolidation phase, right? In consolidation phases, what do we want to focus on? Equilibrium. So here on this, I have the this swing high and this swing low. So I'm gonna put a highlighter like that. So on the weekly time frame, since we're consolidating on the weekly time frame, I have equilibrium marked out. I'm gonna put an alert. So you're not really gonna expect a lot of continuous expansion, especially when price delivery on the higher time frame is consolidation. So I wouldn't be surprised if we retrace back to equilibrium of this range. Because we got our objective today, right? The objective was previously high, previous week high, and we already took that. And it was very clean delivery too. We already took both these levels. But what time of day or what's the day of the week today? Today is a Friday, right? So Fridays are usually more towards the pullbacks of the weekly candles to close the weekly candle. So if Fridays are known for the pullbacks to close the weekly candle, and on the higher time frame we are consolidating or focus on equilibrium, these two things are enough to convince me that it's normal for us to not seek higher prices and have these moves like this, where in less than 8 minutes, we're down like 172 points, like 0.7% down in literally less than 8 minutes. So we know that this is completely normal. Because higher time frame, we're consolidating, time of day of the week is Friday. So you can't be surprised if price takes the highs and then shoots it back down. So I hope you guys can understand that. So right now on the 10 a.m. candle, we have no wick. Very slightly. Let me see. We have a very little wick though on the 10 a.m. candle. So far we have taken data lows. If you know how to trade the range, then you can trade this range. But if you don't know how to trade the range, I would recommend just staying off for today. Because the two main targets were all really ideally they were already hit, which was this high and this high. But if you know how to trade this range, then you can trade it. If you don't, just be defensive, low risk. But me personally, I'm staying out and I'm gonna preserve my capital for next week, which is where the better price or more clear narrative is gonna be in. Wow. We're close to weekly equilibrium. So I'm gonna put the weekly time frame on the top left. Yeah, we're close to that weekly equilibrium. We're about 122 points away from weekly equilibrium. Yeah, this is what you expect when the weekly time frame is consolidating. You're gonna expect range back for PA, retracing back to equilibrium. How would you recommend trading ranges from higher time frame extremes? So if trading ranges, you would just want to wait for external sweeps of liquidity. So Asia highs, Asia lows, New York highs and lows. So you just want to wait for sweeps of lows and look for lower time frame confirmation like inversions, change state delivery, and just trading that back to ideally equilibrium of the range. Because if price is like this, if price is range bounding like this, and you want to trade this range, I would wait for price to at least sweep this high, look for an inversion or a fair value gap, and then just target either equilibrium of this range or hold and target this low. Because price is going to be doing this back and forth, back and forth, back and forth. But if you wait for a sweep of a high, lower time frame confirmation, position yourself, and trade towards 50% of this range or this low, you can trade the range like this. But it's very, I'm not going to say it's very easy, especially for someone that's new, but it's doable. There's people out here who trade like that. Me personally, I don't trade ranges. I used to a lot, but I stopped because I'm gonna go bald if I trade ranges, to be honest. So I just like focusing on expansions. I like when prices just clear delivery expansion to the upside or downside with a clear target. So we swept the previous 4-hour low. We took previous daily low as well. So here we have this for value gap. We're inversing it right now. We have this change state delivery. Seeing reactions from this change state delivery with this inversion. Where's midnight? Midnight is slightly down here. Yeah, also better win rate, good for the mind. Yeah, I agree with that too, because if you're trading ranges back and forth, it's just I mean you can do it, it's doable, but it's just not gonna be it can be a little stressful because you're just trading in the accumulation area where price is just accumulating the higher time frame. So it's easier on the mind when you're just trading expansions because you have a clear target, you have a clear timing, and yeah, your win rate is going to be significantly higher, and so is your profits. So 15 had this clear displacement down, sweeping the previous low, 5 minute, 3 minute. I drew out this premium discount from this high and this low in case price wants to trace to premium or equilibrium. So right now we're seeing this inversion be respected, change delivery being respected, and we're seeing continuation now, possibly to retrace back to either equilibrium, premium, or just these swing or just this swing high right here. Because we had this major sell-off to the downside, taking previous data low. So from this leg down, who's making money, right? So who's making money from this leg down? Obviously, bears are people who are going short. So now we're seeing a price wants to take these stops right here, or possibly just retrace back to premium of this range. So you see how price takes previous data low, and then it starts having this slow grind up back up. This is the thing I was talking about earlier as well. If price is just ranging back and forth, you mostly want to just wait. If you want to trade the range, you can trade it, but you want to wait for like sweeps of either lows or highs from previous candles. Look for your entry model and confirmation lower time frame. And if you get in, let's say we get in at this FEG right here, you can get a solid 2R trade. If your stop is 20 points, like a tight stop loss, you can get a solid 2R, targeting this fair value gap right here that's open. And then your stop could be the low of this candle here. Or it can just be 20 points. But you can get a solid 2R trade just by trading ranges like this as well. So wait for sweeps of old lows and highs. So here we took previous data low. Wait for lower time frame confirmation. Can be this inversion, can be a change to delivery with a fair value gap. This right here is your uniform setup. So you have your fair value gap right here. So this is your FEG. Then you have your breaker, which is this green candle next to this down close candle that had the change to delivery. So this is your breaker right here. This is your unicorn setup. And you can literally set a stop, a tight stop, and then you can go for a 2R. And you can get a nice solid base hit like this. If you want to trade the range. So if you trade ranges, this is the way I would trade the range. Sweep of old lows, lower time frame, entry model confirmation, and just go for a nice solid 2R. Doesn't have to be all the way up here to equilibrium or all the way here to premium of this fair value gap. That could be potentially for runners. But if you're just looking for a solid base hit, then this is really all you need. And you can lock in your profits for the day and then wait for a better PA where expansion is more preferably there. So we're inversing this fair value gap as well. So I'm looking to see if we can find some kind of support on this area. If price is likely to take these highs and keep closing above, likely going to look for equilibrium of this range. Because on this move down, the people who are making money were obviously the people who are shorting. So now price is coming back up, trying to take their stops. And yeah, it's Friday. Weekly pullback for the weekly candle close. Weekly, we're consolidating right here on the top left. So yeah, range bound markets. The 3-minute inversion. So we have 5-minute, 4-minute, 3-minute. Yeah, this 3-minute inversion looks good too. I don't know if you guys know who Kane is, but Kane likes trading the M3 inversions a lot. But I don't really trade the 3 minute inversions. But they're solid. When they're solid, they're solid. Alright, so we have we're retesting this chain state delivery, this last down close candle here. Candle closure below that chain state delivery. Retesting this breaker again. Let's see if I can this. What is Kane's model? Stat map level S&T inversion. Basically, he just this is Kane's model, right? So he basically trades London, doesn't really trade New York, but waits for Asia to consolidate. Then he looks for London to take either Asia highs or lows. Then he looks for an inversion, a 3 minute inversion. Retesting that 3 minute inversion and then targeting the high. So basically he waits for price to tap -2, -2.5. Like this. He waits for a 3 minute inversion. Then he looks for S&Ts at the lows as well. And he puts his stop loss below the SMT and he targets the previous high. So he's basically more of like either a retracement type of trader or a reversal type of trader. So that's basically his model. So he either trades retracements or reversals after sweeping previous highs and lows. And that's pretty much it. Just inversion, SMT, standard deviations, premium discount. Forgot to mention the premium discount as well. So he probably holds runners, or he probably trims around premium, runners around the highs. Ooh, Siri is acting up. But yeah, that's pretty much his model right here. Yeah, no problem. That model itself is a really simple model, and it's quite good actually. I have traded it before, and it's a very good model. The thing is, I just don't really trade reversals or retracements, so I don't really use the model. But when it's there, it's very good. And he executes mainly on London, right? Yeah, he trades on London. I mean, he does live in the UK, so yeah, it's more better for him to trade London. I've seen his model show sometimes at 10 a.m. as a reversal. Yeah, his model is there as well in New York session. All right, so we trace down, tap the breaker again. Now we're coming back above this inversion. I want to see if we can get clear closure above this for value gap on the left side of the curve. Closure above 15-minute. We're pulling back into this 15 imbalance up here. So we have a very wide 15-minute for value gap. So we took the buy stops resting above here. So people who were making money, trailing their stops, Price took previously a low, repriced into this 1 minute for value gap. Now we ran the highs up here. People who took this trade down here at this unicorn, they almost got stop break even if they moved their stop loss here. All right, I'm gonna draw these deviations out from this swing low to this swing high. We have -2 right around premium. So -2, -2.5. So price does want to trace down here and then potentially see a push higher. that would be clean. But I'm gonna look at how we react with this breaker. Are you using a broker for a personal account at the moment or just futures prop? So at the moment, I'm using a personal account. I don't execute on TradingView. I pull it up mostly on NinjaTrader. So I'm gonna see if I can find a picture because I don't have the platform pulled up right now. So I'm gonna do copy image and then paste. So I don't really like execute on NinjaTrader on TradingView itself. Like I don't pull up the broker panel or the trading panel and then just go here. Oh wow. Oh wow, they're putting NinjaTrader here as well. Okay, that's pretty cool. But yeah, I don't pull up my trading panel and log into my broker like TradeStation or AMP. I usually just execute on NinjaTrader's platform itself. And I also have some prop firm accounts that I trade. So I use Replicanto as the trade copier. So I put both my personal and funded accounts together to copy trade. So if I take a trade right now, like let's say I go long, right? That same position is going to be for my other funded accounts and the personal account itself. So they're both going to be linked together in one single trade. So if I'm making profit on one account, all the other accounts are going to be making a profit. And you can adjust the risk as well. So if you're trading a personal account and you only want to trade the M and Q, you can trade M and Q, but you can also adjust the risk for the other prop firm accounts for them to be trading with the regular NQ contract. So if I go long right now with 3 M and Q contracts in my personal, my other funded accounts will be going long with 3 NQ contracts. So you can like adjust the risk tolerance. So it doesn't all have to be like the same amount of risk. It can be adjusted, which is what I really like about NinjaTrader. So that's basically why I trade on NinjaTrader's platform itself. And it's a lot better because sometimes on TradingView it can get some kind of like bad fill or I don't know. It's just more cleaner and more safer for me on NinjaTrader to execute. And it's not that difficult too. You can just pull up the broker. You can execute on it and just monitor price on TradingView. Yeah, I mean the model or this entry model here, like the unicorn after sweeping out Perusia low, it's clean, right? But you also have to focus on the current market environment, right? Not just this pattern itself. So the current market environment, are we at a high probability? Are we ranging back and forth? Is time of day or time of the day on the week good? You know, all these questions you just have to ask yourself. And you have to know when to play defense and when to play and when to attack. Or be risk off or risk on. Because this right now, this looks good, right? We sweep Percy low, breaker for value gap. You can take that long, but you also have to accept the fact that you can get reversed on or stopped out. But if it does go to premium, then that's okay too, right? But yeah, right now I'm just preserving capital. I'm not really looking to engage in the market. All my draws on liquidities were basically hit this morning, which was previous daily high and previous week high. So there's no really reason for me to engage in the market. So if I'm taking a trade that is countering my pre-market game plan, then I'm just going to be doing more harm than good to myself in the long run. it's still crazy to me how this 1 minute candle was able to literally just deliver like 160 points. Not 100, it was like 127 points in seconds. Like this 1 minute candle alone at 10 a.m. open did more than the NFP release. So it was literally already down like 0.5% just in seconds, which is insane. All right, so we on the 15-minute time frame, we tap this 15-minute SIBI. So this is the 15-minute SIBI that we tapped. I'm gonna mark this out as purple. 5-minute time frame, we're kind of consolidating around that area. The 1 minute time frame, we didn't get that change to delivery yet. So usually when we tap into a 15-minute balance, you want to see kind of like a 1 minute change to delivery, but we haven't got that change to delivery yet. So let me make this black. So these green candles are the green candles that stung into this 15-minute imbalance that I have marked out as purple. So when you see a 15-minute balance get tagged or get filled, if you want to see it offer fair value, then you need confirmation. So how do we identify confirmation? We wait for the 1 minute to give us a change to delivery from the leg that pushed us up into that imbalance. So look for the last leg of that green candle, which is this one. Then what you want to wait for is a closure below this candle. But we never get that. You see how the bodies respect this. This isn't valid at all. But we haven't gotten a true change to delivery yet, so it's not really clear confirmation. Because if we do get that body closure below, then you can probably anticipate something like a retest of that level and then taking out these lows down here. So you have your market maker buy model and market maker sell model taking out these lows. But yeah, we never really get that closure below. So it's not really a valid 15-minute internal external. There was a red folder right at that time. At 10 a.m., right? Let me check. 10 a.m. I think it's probably an orange folder. Yeah, you're right. There was. I don't really pay attention to the orange ones. I mostly just look for the red ones, the red folder news events. But there was an orange one at 10 a.m. Consumer sentiment, inflation expectations at 10 a.m. Yeah, you're right. I don't really pay attention to the orange ones, but definitely should because it's good for that volatility injection. But yeah, you're right. There was one. Let's look at this month. Let's look at this the month one real quick. Okay, so we have CPI next week. This is a good folder news week as well. Then after that, we have a bank holiday. And then we have not a lot of news towards the end of the month. But we got something to work with, though. All right, so we're tracing back into this 15-minute imbalance. So this is why confirmation is so important, because we retraced into this 15-minute fair value gap, but we never really got that 1-minute confirmation, which was body closures below this last up close candle. So we're slowly grinding back up. Let's see if we can at least tag equilibrium of this range or premium, where -2 is right there. $10.50 to $11.10 macro. I'm gonna set an alert right here. 15-minute equilibrium tap. Then I'll set an alert here as well at 10 a.m. open. 10 a.m. open. Tagged. So we had another 100-point move, 110-point move, and a 136-point move. Wow. These 1-minute candles are deadly. So 15-minute reactions from this 15-minute FEG. Got this accumulation. At first, we didn't get that confirmation to go lower. We retraced back up, taking out these highs once more. And then we had that sell-off on the 1-minute. Okay, so equilibrium of Friday's range. Let me delete this. So on the weekly time frame, let's see if we can at least go into the 0.5 of this swing high, swing low of this equilibrium range. Yeah, looks like we're about to tag equilibrium. So we're retesting this breaker, this 5-minute breaker. We're retesting previous daily low. Yeah, no problem. Have a good weekend, Benjamin. Stay safe. I'm about to end the live stream too soon. I just want to see if we can take at least equilibrium of our weekly range first. 15-minute time frame, 5-minute, 1 minute. So we already tapped into this 15-minute here. The 1 minute, I want to see at least a 1 minute inversion. So preferably like this one here. With this different color. And 5C. Macro is still in effect. See if we can inverse that fair value gap and then go to weekly range equilibrium. All right, closing below this inversion. Once we tag this weekly equilibrium, I'm probably gonna end the live stream. But I just want to see if we actually do tag this. They have S&Ts at these highs before that. Don't have any S&Ts down at these lows though. Retesting that inversion. That's insane. I was not expecting this much volatility in the New York. Especially on ES. ES, man. Wow. I want you guys to see this. This is NQ on the top, and this is ES on the left. Wow, you can. Wow, I was not expecting that much volume to kick in during the New York session, especially on a Friday. But wow. All right, so I'm gonna end the live stream now. I was looking for us to tap this 5 minute here and then look for that 1 minute inversion, which we did get, but we want to come back and retest previous data low. So I'm gonna end the live stream now. I'm gonna stream next week for CPI. But I hope you guys learned something from today's live stream. Enjoy your weekend. Don't do dumb stuff. And be safe.